I'm Peter Yi. Today, I'm going to share with you about Malaysian property outlook from 2023 and beyond. Let me put on the slide. So, this is Malaysian property outlook from 2023 and beyond. This is my personal perspective and outlook. So all information and personal opinion here is not an investment advice or recommendation. You are responsible for your own investment decision. Okay, there are many factors affect property market. One of it is the real value of fiat money. You see, when there is QE, more money being printed, more supply of money, so the real value of money reduce relative to asset. Property is one asset, so the property price goes up. But now is the other trend, is quantity tightening, means reduce the cash or liquidity in the financial market. So relatively, the real value of money has increased. Therefore, property price or value may go down. Second factor is changes in interest rate. Property, more than 80% of property has loan. So when interest goes up, it affects the property price and value. When interest go down, the property price and value may go up. So the other factor is demand and supply of property in the market. When there's more demand than supply, property market will go up. When there's more supply than demand, the property price may go down. So there are two types of inflation here. One is CPI, Consumer Price Index, basket of food and services. That inflation. The other one is asset inflation, such as property market, which is education market, and stock market. So when there's more money circulating in the financial system, it will affect both of these. Consumer price index also go up, asset inflation also go up. Okay. There are two classification of asset. One I call it real asset. It's tangible and lower risk, such as property, natural resources, infrastructure. Another one I call it fixed asset. It's intangible and high risk, such as cryptocurrencies, collectibles, and speculative investment. Okay, when interest rate go down, GDP will go up. Inflation will also go up. Unemployment go down. When interest rate go up, like now, GDP may be affected down, inflation down, unemployment up. Quantity easing, printing money. So more money being printed or more liquidity in the financial system, asset and CPI inflation will go up. When the QT is quantitative tightening, means reduce the money from the financial system or liquidity from the financial system. Asset and consumer price index will go down. Okay. We look at the US economy first, because this is the biggest economy in the world. Look at the interest rate have been going up quite drastically from almost 0 to about 5% now. So when interest go up, it affects all the asset classes. The price, huh? So inflation rate, the purpose of increased interest rate is to tame down the inflation rate. Currently, inflation rate has dropped to 6%. GDP growth, when interest go up, GDP will be affected down. Huh? Now it's 2.6% for last quarter 2022. Unemployment rate currently has gone up to 3.6%. This is one example. The tech layoff, January 2003 of Alphabet is 12,000, Meta 11,000, and so on. So quite drastic, especially in the tech sector. So this is a projected US unemployment rate. By 2024, it may reach 4.5%. This is about QE and QT. 2008 financial crisis, QE1, QE2, QE3 keep on printing money until 2014-15 and start QT. QT1 reduce the financial liquidity in the financial system. Then 2019, 2020, this 2020, then QE4 because of COVID, drastic printing money. QE4, and then now QT2, quantity tightening, or reduce the liquidity in the financial system. So interest rate increase, quantity tightening, how these two parameters will affect the property market. Okay, this is the FIAT balance sheet. 20 somewhere April, May 2022 start QT. The balance sheet start reducing. This is QT, 9 trillion US Fed balance sheet before QT. So QT started from June, July, August, reduced 47.5 billion on the market. Thereafter, 95 billion per month from September 2022. Okay, this is a correlation between interest rate and inflation. Traditionally, interest rate must be higher than inflation. Currently, inflation is higher than interest rate, which is not normal. So interest rate will go up to push down inflation. So much interest is higher than inflation. This is GDP and interest rate. GDP must be higher than the interest rate for a healthy economy. This is the current Dow Jones, 33,000 plus already now. Okay. US economy, in summary, inflation, current inflation 6%. Need to push down to the target of 2%. GDP currently is 2.6% of last quarter, 2022. Unemployment rate is 3.6%, preferably less than 5%. Policy response, increase interest rate 5%. Inflation is still higher than the interest rate, so interest rate may go up some more. GDP is still lower than interest rate. GDP need to go up some more. No, GDP must be higher than the interest rate. And the other factor affect the US economy is the war in Ukraine since 24 Feb 2022. US election in 2024. Okay, this is the 2022 last year, the asset return. Here, the asset classes are the cryptocurrency like Bitcoin, property, equities, the stock market, bond, gold, and US dollar. So below here, this is the QE, QT things. When QE, all the asset price will go up. QT, all the asset price will be affected. Affected most is the Bitcoin or cryptocurrency, which I call it fake asset, which is intangible in nature, high risk. Then interest rate also go up. The lower line here. When interest go up, it affect property. Property also coming down, even though it's not so much. Stock is still holding. Bond, gold is holding. Dollar is very strong, but it will go down. So this is 2022. What about 2023 and beyond? Why I go to these asset classes? Because it affect each other. Affect property market. Okay. Look at this one. This is called FIAT period. Meaning that when interest keep on going up to one point, when it turns, okay, historically, 1969, before pivot, the asset class, this is S&P 500 stocks, stocks goes up. After pivot, come down, 36%. 1973, similar pattern. After pivot, only down 48%. 1981, down 27%, and so on. Year 2000, before pivot, it go up. After pivot, down 51%. 2007, similar, down 58%. 2019, down 35%. Then bounce back again. Then what about 2023? So interest rate still going up, not pivot yet. So watch out for the pivot. When the pivot turn, most likely statistic or history repeat itself. It will affect stocks. Stock will affect property market. Okay. Now coming back to Malaysia. Currently, interest rate also going up to 2.75%. Inflation rate is 3.7%. GDP last quarter of 2022 is 7%. Unemployment rate 3.6%. for January 2023. This is also the QE quoting Malaysia 2017. You can see the Sankhya QE and then QT, and then 2020 they print more money is QE. Now they start reducing the liquidity in the financial system. It's called QT. Similar pattern with US. Malaysia Ringgit is about 4.4 today compared to relative to US dollar. Top market, Malaysia stock, KLCI 1004 plus. Okay, in summary, Malaysia economy, inflation 3.7%, GDP 7% last quarter 2022, unemployment 3.6. See, the inflation is higher than interest rate, meaning that interest rate will go up some more. GDP is higher than interest rate. That is healthy. Only the inflation is still high, so the interest may go up some more. UT is going on. Okay, now looking at the real estate, Malaysia real estate market, the pattern is down from 13, 14, 19. House price index annual change percentage is down. And this is Malaysia house price index year-on-year change. January 2022 is up, now it's down. Malaysia residential overhang is up. Malaysia real residential property prices percentage change is down. 2022 Q2 is down 2.28. This is the latest information I can find. Malaysia household are the amounts most indebted in the region. Here, the yellow bar means that high borrowing. Currently, the primary market or project we are affected by increased cost of building materials, increase in workers' salary, increased cost of financing, interest go up, cost of financing go up, and then competition from subsidies market or secondary market. So the primary market new development has reduced a few years ago. The supply side has been gradually reducing because of these factors. Now, coming back to the factors affect property market, QT, real value of fiat money, meaning that when they reduce the liquidity or reduce the money from the financial market, the fiat money value go up. Therefore, property value down. When there's increased interest rate, property value down. When supply more than demand, property price down. Now supply is still more than demand. This is a bit about property investment wisdom. Property bust and boom cycle is certain. After bust cycle, followed by boom cycle. Duration of boom and bust cycles varies. It can be 10 years, can be 13 years or more. This is my outlook of Malaysian property market from 2023 to 2035. Property boom cycle in Malaysia 2009 to 2013. Super boom. Many property being built. And then property slowdown is considered as a fast cycle. Happened from 2014. My estimate, it may last another year to 2024. And then new cycle may form from 2025 to 2035 due to all the factors mentioned earlier. This is my outlook. Thank you for listening. Bye.